All right, so I figured I would turn on the camera here, record a video this morning because there has been so much news on the Couche-Tard takeover for 7-Eleven. There seems to be new stuff developing every single day, and I made a video a few weeks ago where I kind of figured that a higher offer was coming in for the bid for the 7-Eleven gas stations and the company overall. A lot of people thought this deal was dead in the water, but it is most certainly not. So earlier last week, we got news, or would have been late last week, we got news that Couche-Tard had hiked its bid for 7-Eleven owner to $47 billion. So this is 47 billion US dollars. When we look to Couche-Tard's market cap at this point in time, we're looking at a market cap of around 69 billion Canadian. So this bumped offer is effectively pretty much the entire size of the company. So the one thing that Seven & i Holdings did say about this is when they had initially pitched the offer, they said it was nowhere near the valuation. And this new offer, Seven & i management did say that it has closed the valuation gap a bit, which leads me to believe that they are looking to consider this. And before I talk about what Seven & i is pretty much planning to do to dodge this, the one thing I will say is that the CDPQ, which is pretty much a Quebec pension manager, essentially, and they are one of the largest holders of Couche-Tard, stated that they would back the company. Quebec Pension Fund says it's ready to back Couche-Tard and 7-Eleven Quest. So this deal not only has backing from Couche-Tard, but it also has backing from major shareholders of Couche-Tard. So what is Seven & i management? You might be a little bit confused as to what they're doing right now in an attempt to thwart this offer, an attempt to kind of stave off Couche-Tard. And what they're trying to do is split into two companies. Now, how exactly does this benefit Seven & i Holdings? Well, effectively what Seven & i Holdings is, and when many people think of this company, they strictly think of 7-Eleven, which for the most part, yes, it is, but it also has a whole bunch of underlying businesses, whether that be superstores, whether that even be they operate in the financial sector. So the company tends to get valued as a conglomerate, which means, a wide variety of businesses slapped together, and these often trade at valuations that are less than the sum of its total parts. They tend to not trade at, what the true potential of the company is, especially when we consider the fact that if I head over to Seven & i Holdings revenue here from FinChat, this is a stacked bar chart. So this will account for the total revenue, and the different colors make up the different segments of the business. We can see here that for the most part, this company is a gas station operator. We're looking at last 12-month revenue of around 12 billion, and we have overseas convenience store revenue at 9 billion. We have Japanese convenience store revenue, domestic convenience store revenue at 910 million. So you're looking at just over 10 billion of 12 billion that is operating in the, convenience store gas station element. And then we have around 1.5 billion in superstores, 300 million in other segment revenue. And then even tinier would be their financial services, which, as you can see here, it's so tiny, it's hard to target. It's around 182 million over the last 12 months. So for the most part, this company is a gas station operator, but what they're saying is by effectively splitting, what they plan to do, so they want to split the business. One would be focused on 7-Eleven, and the other one would be focused on a collection of 31 less profitable retail operations that might bring in strategic partners and eventually be listed separately. I believe they want to list this as York Holdings, I believe they would call it. So what exactly does this do? By splitting, the company can separate out the 7-Eleven segment, and that will likely not trade at that, conglomerate type valuation anymore. It will likely, this is not a guarantee, but it will likely see an increase in valuation because it is no longer a conglomerate. It is just those convenience stores. The company has separated out the less profitable end of the business, and for that reason, shareholders should benefit. So 7 & i management is pitching this to shareholders in an effect to unlock value from their underlying holdings right now so that shareholders don't accept this deal, because management still believes that this deal does not represent the true value of the business. So essentially, they want to get rid of the, unprofitable or low profit segments of the business that is dragging down 7-Eleven gas stations' overall valuations. Now, will this work? It's difficult to say. I would imagine that it would work to an extent. Now, would it work over and above what Couche-Tard is offering right now? Because if we look to Seven & I from a share price perspective, it is trading at quite a premium based on when Couche-Tard made the offer. And if we look to returns from early August, the stock has done quite well based off of that offer. We're going from a share price of $11 to $15. And overall, I kind of wonder if the company will unlock more value by splitting that gas station element out, if the valuation would increase that much, or if Couche-Tard's offer is just too good for shareholders to refuse. It's a 22% bump. But the thing is the market still does not expect this deal to go through, because Seven & I Holdings is trading now at around a 22 or 23% discount to the offering price. The one difficulty here is not only does the deal need to go through from a shareholder perspective, like a Seven & I perspective, they need to approve the deal, it needs to go through, then it needs to go through regulatory approval. If Couche-Tard makes this acquisition, not only would it be one of the largest Canadian acquisitions in history, in fact, I think it would be the largest Canadian acquisition in history, but it would also be the largest foreign Japanese takeover of a company. And do they really want this? I'm not exactly sure they do. This situation is far from over, but we're a lot closer to Couche-Tard actually pulling this off than we were earlier on. As I said, the Seven & I management said that the valuation hurdle has been cleared. So the offer now is a lot closer to the overall value that Seven & I feels the company is worth. However, with a 22% discount to market value, obviously the market does not think this deal will go through. Now, do I think it is good for Couche-Tard? Again, I think they're just biting off a bit more than they can chew here. $47 billion US dollars, just winging this off the top of my head, would be probably around 64 billion, 65 billion Canadian. So you're effectively nearly doubling the size of Couche-Tard. They are going to have to buy this company for nearly the entire size of the company today. This carries a lot of risk. Could the synergies be relatively strong? Yes. Seven & I gas stations do operate at lower operating margins than Couche-Tard, so there is the theory here that Couche-Tard could buy the gas stations, put in some operational efficiencies, boost margins, and then in this situation, this deal would be very, very good for Couche-Tard. But there is also the chance that there could be difficulties, and when you're talking about an acquisition this big, that can cause massive problems, because as I mentioned, there will be significant equity dilution here. There will be significant debt taken on. Couche-Tard has mentioned themselves that they would be very comfortable doubling their current debt ratio, and I would imagine that is post-acquisition. So that would be based on the EBITDA of not only Couche-Tard right now, but that Seven & I Holdings when they bring that in. So what that means is this $13.87 billion in terms of total long-term debt, that is going to more than double. So that's a lot of debt to take on. It's a lot of equity. We can pretty much guarantee their share count is not going to sit at 950-ish million. There is going to be share issuances. And as we mentioned, we've probably got companies that are willing to back the company on an equity issuance. We got the CDPQ, largest shareholder, who is backing this acquisition. And overall, I just think this story is far from over. Do I like it? Not necessarily. There is a chance it can work out, but I still do believe that there's just too much risk here. It's too large. The company should just stick to what they do best, which is just smaller integrations, 1,000 stores here, 500 stores there. I don't really believe it's necessary to go out and buy this massive, massive chunk of stores. If Seven & I were to split and they do separate those gas stations out and we see the valuations increase on that end of things, I think the deal will get even more difficult to, come to a close to actually go through. But I thought I would drop my thoughts because there's been a lot of questions on this, because it seems like every single day there's new news that's coming out. And trust me, I bet you over the next few weeks there's going to be even more news coming out. But again, let me know what you think of the deal down in the comments below. Remember, smash that like button, subscribe to the channel, and stay tuned for more great investing content.